Welcome all of you. We are planning to discuss the concept of tax planning for startups. Today, that is the topic. Not only tax planning, all the tax issues, most of the tax issues of startups we'll be discussing today. Right. So, going to share the screen with you right now. And all of you, I guess most of you must be familiar with the concept of startup. This is a kind of new business. New business, Europe faces a lot of challenges. Tax is again one major challenge, and of course government has taken a lot of steps to take care of that tax issue. So let us see what are the provisions available, to what extent startups will be able to take benefit out of those provisions. Let us learn that. Screen is being shared with you. Hope you are able to see it. Are you able to see it?
Yes, sir.
Okay. Now you see, first important exemption for the startup is available under this section. This is section 80 IAC of Income Tax Act. Okay, here this is a big benefit in the sense almost a startup can enjoy 3 years tax holiday. It doesn't have to pay any tax during that 3 years, but startups has to be carefully select these 3 years. And this limit is available to some specific startups. Who are those startups? You can read it here. A Department of Industrial Policy and Promotion, the DIPP recognized startups shall be eligible. So, not that every startup will be eligible to take that benefit. So, there is an interministerial board which will sanction, which will give a sanction to this particular startup was applied, and this benefit can be sanctioned. Right, and the following conditions also needs to be satisfied. This entity should be a private limited company or an LLP, limited liability partnership firm. It should have been incorporated on or after 1/4/2014, but before 1st April 2022. Okay, earlier it was 2021, now it has been extended. So from 16 to before 22, that has been incorporated. This is how it can be a new business. And when it is a startup, startups should be engaged in innovation, development and improvement of a product, process or service, or scalable business model with high potential of employment generation or wealth creation. For these many activities, if startup is created, then one can avail the benefit under section 80 IAC. Okay, conditions you remember should have been a private limited company or LLC. Incorporated during this period, 1st April 2016 to 1st April 2022. Okay, and must have these characteristics. They must be manufacturing or engaged in the business involving innovation, development, improvement of products, process, or services. Okay, understood this? If this is the prime condition is met, then there is a possibility that this benefit may be granted to them. Okay, understood this? Okay, then what is that benefit? We'll be seeing it now. Now, one more thing. An entity shall be considered a startup up to 10 years from the date of incorporation. I told you the period during which it should have been incorporated. So maximum period for which they can be considered as startup is 10 years. Right? So shall be considered as startup up to 10 years from the date of incorporation. And the turnover should be less than 100 crores. Yeah, are you able to see it now?
Yes, sir.
Just give me 1 second. So the conditions I told you, this entity shall be considered as startup for 10 years from the date of incorporation. Turnover should be less than 100 crores in any previous financial year. If turnover exceeds 100 crore in any of these 10 years, then that is no more a startup. Okay, that is no more an eligible startup. Okay, so once the company crosses the mark of 100 crore, no longer remains eligible for getting the benefit. Okay, then the firm should have obtained approval from Department of Industrial Policy and Promotion. So DIPP approval should have been obtained. For that thing, the firm has to apply. That startup, should be working for innovations, improvement, etc. We know. Then one more thing, the startup must not be formed by splitting off or reconstruction of an existing business. That means, let us say, same business was there and you split it and form a new business during this period, 2016 to 2022, then that will not be considered as a startup. That means that as if the existing business is continuing. Okay, so that is one more thing one has to take care of. And as I was telling you, one has to apply for tax exemption under Section 80 IAC. Okay, and for getting tax, after getting this exemption, the startup can avail tax holidays for 3 consecutive financial years out of first 10 years of its incorporation. So incorporation period, So any block of 10 years, 3 years tax holiday is available. 3 years consecutive. Okay. So that startup has to select carefully. So normally, if the profit grows, we'll assume that profit grows year after year. So startup should avail this benefit during the last 3 years. So that profit will be more tax exemption can be availed. But again, one thing, this in fact helps the startup to generate working capital. So if there is working capital requirement, then startup can think of availing this benefit in earlier years also. Okay, and how we can apply for this thing? This link is available in the Startup India portal. One can try, apply there, the Startup India portal. Startup India portal, you may also visit there. There is a procedure for registration. I would like to take you right now to the Startup India portal to give you some idea how it happens. Let me take you to that page. Have you ever visited Startup India portal? Anybody has visited? Yes or no? Whether anybody has ever visited Startup India portal?
Yes, sir.
Okay. So let us go there. Yeah, startupindia.gov.in. If you visit, okay, you can have a look. Startup can apply for registration. This is Startup India. Of course, there is Startup Odisha is also another site is there. So one can have registration in the state level startups as well as the central startups. Here you see, here if you click here, you can find out login or register. You can get yourself registered for. That is the option. Okay, after registering, you can find out if that link applying for this 80 IAC benefit link will be also can be seen. These are this highlights so many schemes. What are the benefits of startup? One can find out. Please visit to the website. You will be able to know about it. Okay. Now, friends, once again, I'm sharing the PPT with you. Now you have seen how to the registration link was there, and the procedure of registration is simple. So you are required to create a login ID in the Startup India portal, right? And after that, this exemption for application, this application exemption under 80 IAC can be made in that portal itself. And this is the portal I was showing you. Here you can, if you are already having an ID, you can log in or you can get yourself registered here. Okay. And these are the list of documents which are required for one person to get himself registered in Startup India portal. Memorandum of Association for a private limited company or LLP deed board resolution, annual accounts and income tax return. But however, in certain situations, income tax return may not be required. Right? The balance sheet should be certified by a chartered accountant. Startup which incorporated on 1st April 2018 or later, income tax return is not mandatory. But before that, if startup was incorporated, income tax return is mandatory. A startup link video link should be provided. Startup video link should be provided. I'll be telling you what should be there in the video link. All these things needs to be uploaded. One pitch deck means a document, a PDF file also needs to be uploaded. These two things I'll be explaining. The video link means it's a short video. Short video means maximum for 5 minutes. Normally it should be for 2 to 3 minutes. Video should be uploaded, which will be describing about the working of the products, walkthrough of the products, a detailed description about the product, how products looks like. It can be a product prototype. It may also showcase the market tracks, what kind of marketing is happening with that product. So all these things should be there in the video. That video link can be uploaded in that application, in that portal. Then one pitch deck means a PDF file is to be uploaded containing the information about the product or services, informing about the innovations involved in that startup activity, detail of the directors, shareholding pattern, citizenship detail of the directors, details of the team, details of software licenses like PASI registration, etc., revenue model of the startup, then funding received from private investors, okay, then support received from central government, screenshots of the images of the products, website, etc. Okay, number of customers, number of people employed in that project. So all these things, the pitch deck may be prepared and can also be uploaded. This is how one can get itself registered in Startup India portal. Then one can apply for the benefits available under income tax law. Okay, and once registered, few more additional benefits are also there. Exemptions from levy of angel tax is also possible. Okay, angel tax means when a startup issues equities at a price more than its fair value, then the difference amount is taxed. That is called as angel tax. So angel tax can be also exempted under section 56(2) 7B. Okay, deduction of section 80 IEC, that is what I was telling you about. 3 years tax exemption in a block of 10 years as possible. And also one can also carry forward losses, that section 79 discusses about this thing. Exemption under section 54 GB for the shareholder for making investment in startup. This is one more exemption is available for the for some investments made in startup. Capital gain exemptions will be available. Okay, then there is a dedicated cell in the CBDT. So one can get access to the dedicated cell of the CBDT, that is Central Board of Direct Taxes, to address the problems of the startup. So these facilities startup can enjoy if it is an eligible startup. Okay, what is angel tax? Startup can get benefit, eligible startup can be exempted from angel tax. Angel tax is the tax charged on the closely held company. Loosely, we're talking about private limited company, when it issues shares to the resident person at a price which is more than the fair market value. Suppose fair market value of the price is 40 rupees, but shares are issued, let us say, at 200 rupees. The difference, 160 rupees, will be taxable. That is called as angel tax. That's the tax on the angel investment. Okay, so this is a big tension for the startups, how to manage that angel tax. But an eligible startup can get exemption for this thing. Okay, but conditions are there, but have to take care of these conditions. This provision is triggered. The aggregate consideration received from the issue of the shares exceeds the fair market value, is charged to tax on the head income from other sources. That means this angel tax provision will be triggered only when the consideration received exceeds the fair market value. If it is not exceeding, then that is not an issue. Okay, but once startup is recognized, it can apply for angel tax exemption. Okay, startup will be eligible for claiming exemption from the levy of angel tax under section 56(2) if the following conditions are satisfied. These are the conditions we are talking about. First of all, entity should be a recognized startup. Second is that aggregate amount of paid of share capital and share premium of the startup after the proposed issue of the share does not exceed 25 crore of rupees. So for those kind of startups whose aggregate share capital along with share is up to 25 crore, not exceeding 25 crore, then they can get benefit of this angel tax exemption. So this is a good exemption for the startup. So far as this kind of share issue is concerned, 80IAC benefit you already know. Okay, 80IAC had told you these concepts. Yeah. For claiming benefits of 80IAC, one need to apply in the particular form. In form 1, one can apply. Board may call certain documents before issuing the certificate, but once certificate is obtained, one can avail the benefit of 80IAC, that is 3 years tax holiday for startups. Okay. Now, one more related points relating to the startup. This is about section 54GB of the income tax. So this particular section exempts the capital gain arising from the transfer of long-term capital asset being residential house property if the amount is invested in subscription of equity shares of an eligible company. Right. That means if some individual and HUF has a capital gain on account of sale of residential property, then it can invest that money in a startup, in an eligible company. The law says eligible company. Eligible company includes startup. Eligible company means if you see, it should be incorporated in India. Okay, so it should be micro, small, medium enterprise. It's in that kind of company, and it should be also that eligible startup. So money can be invested in an eligible startup or in a startup company, and this benefit of 54GB, that is exemption from capital gain tax, can also be available. So this, in fact, is a benefit to the investor. And for startup, this is an indirect benefit. The startup will be able to generate more fund because of this provision. Okay, and the conditions attached to this 54GB section is that capital gain should have been arisen from sale of residential house property or from transfer of residential house property. And this benefit can be enjoyed only by individuals or HUF. The claimant is required to utilize net consideration. Whatever is the net consideration, that means when the asset is transferred, the consideration is received, that money should be invested in a startup's capital. Then only one can claim this exemption. Right. One more related provision is exemption from long-term capital gain. This is about section 54AE. This is the long-term capital gain of a startup. If startup has, let us say, there is some long-term capital gain accrued to the startup, then startup can get certain exemption. So this is again available for this eligible startup. Eligible startups, long-term capital gain can exempted if such long-term capital gain is invested in a fund notified by the central government within a period of 6 months from the date of transfer of asset. So within 6 months, that fund needs to be invested in, that money needs to be invested in a fund which is notified by central government. But the maximum amount of investment is 15 lakh rupees. And that the fund should remain invested for a period of 3 years. If it is withdrawn before 3 years, then exemptions are very low. Exemptions are also be withdrawn. So this is one more option for exemption of capital gain, that is accruing to the exemption of long-term capital gain of the startups. So if these conditions are compliant, startups can get long-term, can get exemption from long-term capital gain. Okay. Angel tax also, I told you all this thing. Yeah, this is benefits of this thing. I also told you. Yeah, one more exemption is that set up and carry forward of losses. So losses can be carried forward by the startup, provided that 51% of the voting rights remain unchanged. That means if the law you want to carry forward the losses to a different year, there should not be such substantial changes in the, or you can say majority of the shareholders should remain same. If that is there, then one can normally carry forward the losses. But the restriction of holding 51% of the voting rights remaining unchanged under Section 47 has been relaxed in case of eligible stock. That means normally you can carry forward the losses when there is no major change in the share. But so far as eligible startups are concerned, even if there is some change, there is a major change in the shareholding. Even if the 51% of the shareholders are not holding shares in the subsequent year, still losses can be carried forward. This is the perfection. Yeah, so this broadly talks about various tax benefits available to the startup. But a startup needs to take care of many other things. For example, tax deducted at source. So if startup is making some payment, let's say making payment to the contractors, making payment to the consultants, making payment to the many other services, they have to ensure that if TDS liability is there, that should have been properly taken care of. If tax is required to be deducted, that needs to be properly deducted. Otherwise, that will invite penalty and other consequences that will also affect startup. So TDS should have been properly deducted. Then advance tax, if that provision applies to the startup, startup should pay a timely advance tax. By doing that, he'll be able to save interest. Then startup need to avoid cash payments. Cash payments, revenue payments in excess of 10,000 rupees will not be allowed. So to the extent possible, payments should be made through banking channel. And all the returns needs to be filed in time. Income tax returns, TDS return needs to be filed in time. Delay will unnecessarily invite this thing, penalty consequences, interest consequences. Indirect tax compliances are also important. For example, GST payment, GST return filing, GST audit if applicable. So all these things are important. Otherwise, that will invite huge penalty and will affect the startup's cash flow. ROC, that is Register of Companies Compliance, startup need to file all these ROC filings which are required, annual returns, directors KYC, all these things needs to be filed timely, otherwise penal consequences are there. And startup also needs to take care of all renewals. Suppose it has got a FSI registration. When renewal is required, that needs to be renewed. So all these kinds of renewals needs to be timely renewed. These are the issues which a startup needs to take care of if he wants to avail the full benefit under income tax. Okay, so this is broadly we discussed the topic, and these are the provisions which affect the startup.